Jared Bernstein, chairman of the President's Council of Economics Advisors, joins us. And Jared would say, when you ask them specific things, though, there's a different story. They like this, they like that, and they like this. That. So I don't know if I even need you here, Jared, because I know what you're. But 36 isn't
Surely
great.
We need each other.
I'll tell you what I think it is, Jared. Inflation is the rate of change is coming down, but stuff that people bought 2 or 3 years ago because of the initial increases, things are still expensive. They might be going up less, and wage growth only recently has started keeping pace with that. So people still feel like they're behind. I think that's got to be it, and I don't think you can deny it. It's probably not a good idea to deny that people are feeling that.
So let me unpack a lot of what you said, and I am going to agree with you on this angle of when you get down and you drill down to what we're actually doing, as opposed to these kind of more abstract 40,000 feet up questions. 76% of people support the infrastructure law, the bipartisan infrastructure law, and that's obviously to repair highways that they drive on, broadband internet that they use, clean water that they drink. 72% support the CHIPS Act, and that's obviously critical to not only strengthening supply chains, but standing up a domestic semiconductor industry here. About 2/3 support the Inflation Reduction Act. And by the way, there's some of the statistics that I think you're citing are getting a little bit stale. So University of Michigan sentiment is actually at its highest level since October of 21. Consumer confidence highest level since July of 21. Some of these things are starting to move in the right direction. And I think one of the reasons for that is something else you said, which is real wage gains. Look, I think you make a fair point in terms of how people feel about disinflation, which is less pleasing than deflation. But when you have real wage gains, essentially your consumption basket becomes more affordable. So that's also moving in the right direction.
Jared, there's a lot of talk about China today. We're going to continue to talk about it. And some of it just at least made me think a little bit about what we're doing in the United States in terms of sort of Keynesian stimulus and the positives for it and the negatives for it. And, in China, the debt is so high now that they may be ushering in an extended period of lower growth just because of debt service. Near term, the economy, it looks like we're dodging the recession bullet at this point, maybe, hopefully. But there is quite a bit of stimulus still in the system from what you talked about, the infrastructure, the IRA, the CHIPS Act. It makes the Fed's job maybe even harder and may end up causing them to go higher than they would have normally had to go if there wasn't so much fiscal spending. Do you worry about that?
Well, I think here we don't have to speculate. We can actually look at how much fiscal impulse there is in the economy. And remember, the key thing here in terms of growth and the Fed and all the things you're talking about, stimulus, is fiscal impulse, which is the change, really the delta in the primary deficit. And if you look at, Brookings has a measure of this, which you can point and click to, their fiscal impulse measure, and it's just been about zero. Of course, it was through the roof during the pandemic, and it needed to be to help get families and businesses very quickly to the other side of the crisis and set up one of the strongest labor markets we've seen, unemployment below 4% for a year and a half now. It's an interesting comparison with China, because I think one of the problems that you see there that's probably less talked about, the debt overhang, I think you're accurately describing, but you also have there a household sector that really isn't capable of coming in and providing the kind of consumer spending that they need right now. And that's because there's been large disinvestment in that sector and even some suppression of consumer accumulation there. In our economy, we obviously have a strong consumer, and we have a 68% consumer spending GDP. So if we have a tight labor market with the tailwinds of rising real wage gains, helping consumers to keep things going, you're going to get numbers like the retail sales we saw last week, and that's helping to sustain the expansion, somewhat of a virtuous cycle going on here. And with inflation easing, as we've mentioned, down 2/3 from its peak, now we're talking about real wage gains. So again, I think that's more positive news for the flywheel pushing this expansion forward.
Jared, philosophically, there's always been a debate about whether the government should direct investment into favored industries. Where I'm going with this, we just had Chris Womack, Southern Company, they just started a nuclear plant that they've been working on for 13 or 14 years. So the $1.2 trillion that's in the IRA for renewable energy or new, and I think it's risen to that. Some people have a problem with that number, but it's a lot of money. I don't think any of that is nuclear, and that might be part of the issue. That are you sure the government knows how to spend and subsidize $1.2 trillion better than the private sector, which might?
Well, wait a second.
Yeah, go ahead.
So the $1.2 trillion includes the private sector. Just to be clear, that's including some of the contributions that you see. Really,
the government's picking the industries, though, and it may not be the right industries that the private sector would pick if it wasn't government.
Right. So I think that there's 2 points there. So one is that I think it's a mistake to conclude that we've never done industrial policy up until this moment. In fact, the history of not just this country, but every economy is very much filled with lots of industrial policy. It's Alexander Hamilton with manufacturers back at the beginning of our country. But then if you turn to the tax code, I think the problem that we had, we've argued about this over the years, is that we were doing industrial policy in a way that was pretty, not particularly thoughtful. That is, whoever had the best lobbyist got the best tax break. That's not the way this president wants to proceed. With Bidenomics, growing the economy from the middle out and the bottom up, we're reversing decades of disinvestment in key sectors, including manufacturing. And again, people recognize that this is very important, not only for replacing some of the hollowing out that occurred during globalization when places lost factories that really made their towns. And therein, we see hundreds of billions of dollars coming in from the sideline to help rebuild this sector in areas of clean energy production and semiconductors. 2 areas where the market very clearly produces what we need to achieve both resilient supply chains and our national security goals. So those seem to us and to most Americans like smart investments. And by the way, part of that group of most Americans are investors who, as we started this part of the conversation, are quite excited about these actions.